Good morning, good afternoon from Istanbul, from Adfimi. Today, we are again together with another webinar as open banking and the future of the open banking system all over the world. And thank you very much for all participants from all over the world as Adfimi members or non-Adfimi members. Today, we will talk about the open banking and the future of the open banking all over the world. As we already know very well that after the COVID-19 epidemic crisis, the globally world came another period in the time, especially in the financial sector and the other sectors have been affected from COVID-19 epidemic crisis. Especially the financial sector has taken part from this crisis. Today we'll talk about open banking system and new technologies in the open banking system and digitalization, fintechs, and the other things which definitely affected the financial sector, banking system, and open banking system. Today we have a very special and important, very distinguished speaker, and they are very experienced in their own sector and own expertise. We have from practitioner sector, from academic sector, and also in the expertise. Today we will start to this webinar with Mr. Sinan Kadıoğlu, and before starting his speech, his presentation, I would like to introduce Mr. Sinan Kadıoğlu for all participants. Mr. Sinan Kadıoğlu, head of the digital banking and the channel management department, Ziraat Participation Bank. Born in Istanbul in 1973, graduated from the Hacettepe University Faculty of Engineering, Department of the Computer Engineering in 1995. Currently a graduate student at Istanbul University, School of Business, Accounting and Auditing. Started his banking career as a software developer at Ege Bank in 1995. After working in the position of the software development specialist and system analysis, transferred to Akbank in 2000 and worked as information technology software development specialist and application development manager. In 2011, appointed as service manager at Ziraat Technology Company. In 2013, transferred to Ziraat Bank Card Operations as head of department. Taking an active role in establishment of the Ziraat Participation Bank in 2014, appointed as head of the digital banking department at Ziraat Participation Bank. He is working as head of digital banking and channel management department at Ziraat Participation Bank since 2015. So, Mr. Kadıoğlu, the ground is yours. You can start your presentation. We are waiting your presentation. Please, ground is yours.
Thank you very much. This will be the sharing. Do you see the
yeah, we can see you, Mr. Sinan Kadıoğlu, but yeah, we can see your presentation, but your voice is, yeah, you can continue your presentation, please.
Okay, first of all, I want to welcome you. My name is Sinan, as you. I am working as the head of digital banking and channel management at Ziraat Katılım. Today, I will give you a presentation on the effects and future of open banking in the financial world. My presentation will take about 20 minutes, I think. I hope it will be enjoyable and useful presentation for you. Today, I will try to give you information about open banking, open finance, and open data. I will also share the situation regarding the future of open banking and open banking APIs. And sorry. An open bank shares or consumes business services like data, transaction, and algorithms with business ecosystem partners, such as other banks, partners, employees, customers, fintechs, and developers. Open banking means that banks simultaneously lose control and gain opportunity. Opening up to third parties exposes their data, but it also lets them take added value onto their own products and services. Open banking provides a platform business strategy that enables new business models and ecosystems that have the potential to transform the banking industry. This hype cycle examines the four main categories that banks should plan strategy and technology adoption around in priority order. The first one is strategies, open banking, orchestration, creation, matching, and adaptable relationship banking. The second one is architecture. These are public APIs and private APIs. The third one is technology and services. These are full lifecycle API management, digital business platforms, digital marketplaces, API marketplaces, banking industry architecture, network standards, API standards, API threat protection, and API management platform as a service. And last one is ecosystems, business ecosystem modeling and hackathons. Because open banking enables new business models and ecosystems, several innovations in this hype cycle have the potential to be transformative. In the 2-5-year time frame, these include the digital business technology platform, the four bank platform models, creation, matching, collaboration, and orchestration, and open banking strategy. It is crucial that banks develop their open banking strategy in the immediate term to be competitively well positioned as these transformational capabilities become mainstream. The digital business technology platform, coupled with the open banking strategy and appropriate business model, can help banks transform and grow in the digital economy. We can think of open banking as the first step of open finance and open data. The desire of customers to use their data with their own consent in different and fast service of other institutions or financial technology companies will accelerate this development. In this ecosystem, the determining factor will be the customer and the customer's consent. The new action, opening up our digital lives. Let's talk about the open life. Open finance will be bigger than open banking because it covers the whole of finance, including non-bank products like investments, superannuation, insurance, and even property. A great example of finance, open finance, is a car insurance. The terms of open banking, open finance, and open data are a continuum that describes how the same data sharing right will roll out across multiple industry verticals over the next decade. Here is a quick summary of the terms. Open banking refers to the content that consumers can direct banks to share their accredited third parties. Open finance extends the data sharing found in open banking to a broader range of financial products and services, such as insurance and wealth management, including superannuation. Open data is the broader idea that specific data sets should be freely available, accessible, and reusable. A commonly cited example is data collected by government agencies. Before we deal with open finance, let's take a deeper look at the apparent success of open banking. Open banking aims to help banks' technology departments create innovative new products by leveraging new technologies. The most promising use cases for such new products are account information services and personal finance, lending for consumers and SMEs, and finally the payments. Having all of a person's information from current accounts, saving accounts, credit cards, and the other information, all in one place will provide better opportunities for them to manage their finances. With the provision of such services, many players have entered this space, from fintech banks like Revolut, subsidiary of retail bank like Yolt, and also to new players like Tink, acquired by Visa. New companies New companies are starting to build recommendations around QR-based solutions for faster lending decisions with access to multiple data sources and even instant loan payment instead of delayed invoicing. Payments are the third biggest use case. However, the rate in all payment transactions is very low at this stage. This usage will increase with contactless transaction, QR transaction, and account payment methods. In the survey conducted by EFMA, open banking was the second when asked about the most important technologies of the future. Open banking, third-party service providers allow users to access their financial information and process transactions within their permission. Open banking is part of a wider trend of giving citizens and customers more control over data and revitalizing existing sectors through the use of modern technologies, processes, and business models. Using application programming interfaces, open banking gives these providers access to consumer banking, transaction, and other financial data, allowing the networking of accounts and data to provide more insights and the services in a secure way. The future will be in open finance. In an increasingly digitized world, consumers expect and demand a customer journey that is personalized, frictionless, and available 24/7. The open finance movement looks to meet and exceed this expected well-being. It will be exciting to see how open funding opportunities unfold around the world. What is open finance? In simple terms, open finance is the next step in the open banking journey. Financial data such as mortgages, savings, pensions, insurance, and consumer credit, basically your entire financial footprint, could be opened up to trusted third-party APIs if you agree. Open banking already allows regulated websites and apps to access transaction data from bank accounts and payment services so that you can move, manage, and make more of your money. Why open finance? Vision of open finance for consumers and businesses as follows: to gain access to a wider range of financial products and services, to have greater control over the finances and empower better financial decisions. The end goal is improved financial health driven by market innovation and competition. Open data is by definition data without license, limitation, or price. There are many kinds of open data with awesome potential use cases in areas such as culture, science, education, statistics, economy, finance, weather, environment, transportation, agriculture, and more. As the open data field is about exposing information, there is much overlap between open data and APIs or application programming interfaces, which expose an application's data or functionalities for third-party integration. Opening data is doing a public good in a government setting. Open data increases transparency and allows citizens access to valuable information. In our digital age, this information is crucial for spurring innovation in business to deliver and social value. A business may also choose to open data sets to increase engagement with their community. And for government, it increases social participation in governance. Open data portals can learn a lot from API-first culture in terms of design usability, product ownership, and ongoing maintenance. Fintechs can develop more agile business. In this way, they ensure customer satisfaction by offering special products and concentrated experience. Banks have had to collaborate with fintechs rather than compete for larger digital solutions and broader business models. Technology and payment system companies that want to simplify and provide greater transparency in financial services are constantly emerging. Reasons for consumers to use fintech players' services include low-cost offers, ease of use, faster service, better features, and personalized products. Banks take their place as the most important stakeholder in open banking and open finance studies. However, they are concerned about the difficulty of banks cooperating with third-party organizations and the difficulty of retaining their customers. In addition, the regulations they have to comply with and the fear of fintech companies taking up space are causing them to move slowly. Through open banking, customers will discover that they own and control their own data. They will understand that their data has value, and by sharing it with confidence, they will have more choices in how to take advantage of better products and services. Many banking customers cannot make the right decisions about their account or service selection because they do not have access to the information needed to be a smart customer. Open banking will make it easier to be a smart customer. Therefore, open banking has the potential to radically change the competitive environment. And it will be the customer who will be determinative. Leveraging open APIs to integrate both internal and external capabilities will give banks flexibility to innovate in their business models. We see for digital business models emerging in recent years. These are digital front ends, neobank, digital introduced broader business models through API generation and use. Banks now have a number of business model approaches they can use when establishing relationships. They can apply broader and more advantageous pricing and revenue models. These are categories: open banking, service banking, partnership, and incubator will contribute positively to banks outsourcing at different levels. Open banking is playing an increasingly important role in the daily lives of consumers. Banks that wanted to drag their feet into the open banking ecosystem would create APIs only as required under the regulations. By the end of the year of 2020, there were 3,496 open banking API products available globally, with 36% of these being API products that go beyond the regulatory requirements. These APIs will enable a broader range of products to be created by fintechs and be used in automated workflows by existing bank customers, thus driving the use of open banking in 2021 and next years. Although all compliance processes have not been completed in the world, and in Turkey, banks continue to offer their APIs rapidly. Open banking and finance all over the world a regulatory approach to the development of the industry exhibits. Open banking, which allows customers to solve their financial needs from many different points instead of a single channel, thus removing centralization, offers customers a fairer and higher experience as well as diversity. In this context, as a result, Ziraat Katılım, we continue our work uninterruptedly. The most important advantage of open banking in the financial world is that the data is transparent. The customer's purchasing habits, financial goals, risk tolerance, and social interactions can be achieved and translated into action. Insights from this data will enable omnichannel marketing. In other words, the ability to apply machine learning and artificial intelligence will be able to respond to customer requests such as know me, look at me, reward. This is expected to greatly improve the non-real-time customer experience. Open banking offers the opportunity to diversify and distribute financial and non-financial products and services. Collaborations with fintechs and banks greatly increase the number of variety of services to improve customers' quality of life. As a result, banks will enter the process of developing an unlimited number of partner relationships. Thank you very much for your attention.
Thank you, Mr. Sinan Kadaoğlu. It was very good, very important presentation, and thank you very much for your all contribution for this webinar. And I believe that all the participation take lots of information and experience from you, and thank you very much again and again. So we will continue our webinar with very important practitioner in his own expertise in his own area, Dr. Selim Taştan. Before his presentation, I would like to introduce Mr. Dr. Selim Taştan for you. And Dr. Selim Taştan, Head of the Digital Transformation and Innovation, Kuwait Türk Participation Bank. Dr. Taştan began his banking career in 2005 by starting working for Kuwait Türk Participation Bank as quality manager and the project manager in the IT group. Between 2013 and 2016, he worked as the head of the IT and KT Bank AG, a subsidiary of the Kuwait Türk, established in Frankfurt, Germany. He moved back to Istanbul and continued his career as the IT application management manager in Kuwait Türk IT Group. He has since 2018 been working as head of the digital transformation and innovation in the strategy sector. He completed his PhD in business administration, and his doctoral thesis was on economics and technological determinants on new entrepreneurs emerging in the global financial technology sector. He has project management professional, ITIL expert and service manager, COVID Foundation, and CISA certificates. Dr. Selim Taştan, the ground is for you, please.
Well, thank you very much. Thank you very much for the invitation as well. Let me share my presentation. Okay. Are you able to see it?
Yeah, very well. It's very good.
Okay. All right. Feature of open banking. Well, first of all, before we started our presentation, let me give you an overview of what I'm gonna cover. Okay. First of all, I'm gonna talk about the definitions of the open banking. There are some terminologies and definitions that are being confused. So I will make sure that we understand, first of all, what the definitions of what is the meaning of open banking and other APIs and other terminologies. And also I will discuss about the value, what value is being added by the open banking. And also I briefly mentioned the open finance. And lastly, I will talk about mention the Kuwait Türk Participation Bank API portal, and what kind of projects or enhancement, improvements about the API banking on the behalf of the Kuwait Türk Participation Bank. Okay, let's start with open banking. But first of all, what is open banking? Maybe this is, I got it from MasterCard Newsroom, and it's really very comprehensive definition. The open banking is just, gives you the ability to share your financial accounts data, access the innovative financial services experience. So in this case, just sharing the financial accounts data. We are sharing whom data? Customer data. Sometimes there are misunderstanding that, the owner of the data, they say some people say the owner of the data is the banks. No, the owner of the data is the customer. So customer, we own the data, and the banks are just the data custodian. That the banks protect the data. So with our consent, with our permission, we share our data stored in the banks to share to be by third parties. We call it third-party providers, TPPs. So traditional way, the data is only being shared, you and your bank. For example, you are using your mobile banking app, so you share your data, you see your data through the mobile banking app. But there are other financial, fintech players, startups, or different applications, so you can share your data as well. So that is open banking, just sharing the data with other institutions, financial fintech players and third-party providers. So another term with the open banking is the API. Well, when we talk about the API, we can say that the API is the technology. So yeah, API is the stands for the application programming interface. It's just a software. It's just a software, a technology that allows two applications or two institutions, two different entities to talk to each other. So like, each time when we use Facebook, Twitter, or Instagram, like instant messaging, or you can book your, flight tickets. You can make a reservation with hotel. You go to the platform, the websites, you check the prices, which prices are lower. So these platforms, websites are using APIs. So for example, you want to buy a flight ticket, you get it, you see the prices, which one is the lowest price, but that information being extracted from Turkish Airlines, from other international airlines. So API is pretty much the technology, we can say that. Okay, let me do the slideshow. Yeah, that is much better, right? Okay, this is the information from the McKinsey's research report. We call the three types of APIs: public APIs, partner APIs, and the internal APIs. When we talk about the public APIs, we call also open APIs. These APIs are used by the external partners and the developers. They develop like fintech players, we can say that, they can develop innovative apps and the products. So these APIs, open APIs or public APIs, they can be shared by any fintechs, okay, any startups, or any, it doesn't have to be startup or a fintech. It could be, companies, the corporates in the retail sector, in telco sector. This is the open APIs. You sign up for it and you start using it. Okay, the partner APIs, that's the different meaning. The partner APIs, these are the APIs used by the business partners, especially if you agree with a business model, a common business model with a partner, or you are going to use the partners, your fintech partners, products and services, you can customize, you can develop partner APIs for that fintech startups, companies, or you can do a partner API with e-money institutions. You can develop a partner API for payment companies like fintechs. You know, these are the partner API, but these are the special APIs. These are not like open APIs. These are special, customized based on the requirements, the features of the products and services. These partner APIs only shared by the partners. And the third one is the internal APIs. These internal APIs, when we talk about it, these APIs are used by the developers, software developers within the enterprise. Like, for example, you have 2, 3, 5 different applications within the organizations. These applications are being communicated with each other with the internal APIs. So these are the 3 different types of APIs. There are the attributes for the APIs, like for the public open APIs, innovation through the engaging developer community. And for the partner, there are also, reduced partner cost, API monetization. These are the benefits of, the partner APIs. And also, when we talk about the APIs, we can understand there is an enhanced security with the APIs. Like, for example, the banks are using web services also, and different type of technologies. But web services, when we look at the technologies, is less secure. But the APIs compared to the web services is more secure. So when we say about the whole APIs is enhanced security, we can say that. And the internal is, pretty much the cost reduction when the organizational operational efficiency and enhanced security as well for the internal APIs. Sorry. This is another graphic that I put it from the McKinsey & Company. That's the open banking. Basically, the benefit of the open banking is provide the flexibility to the customer and creates a more complex competitive environment. So when we talk about it, on the left, okay, this side, bank on the customer relationship. For example, you are a customer of a bank A, bank B, bank C, and also your customer, as a customer, banks on your relationship. Whatever a bank offers products and services, you're gonna use it, and because banks' mobile banking apps or online banking or the branches only ways to access the bank services. So you are gonna use, like we call it, digital channels or the branch channel. Customer can use this channel to have the relationship or to get the data about their accounts. Okay, but with the PS2, like PS2 is the Payment Services, Payment Directive Services Act in European Union. With PS2 and also UK, one of the first country that has introduced this open banking standards and framework. And the customer, yes, customer has the data and customers are working with the bank A, B, C. Also, customers are using different applications, are having different products and services from different players, fintech players, startups, or technology startups. So in this case, banks open access to their core banking services through the third-party channels. How they're going to access it? Via APIs and other technologies as well. So this way, the players outside the banks in the fintech ecosystems, they got a chance to compete the non-banks. Okay, they got a chance to compete with the bank financial institutions. We call it traditional financial players, institutions. Okay, another definition that I like to mention, discuss about the BaaS and the banking as a service versus to banking as a platform. When we talk about the banking as a service, especially banking as a service, we can relate this banking as a service to Turkish regulation framework, because now it's a draft version of the regulation proposal made by the Turkish Banking Supervision Agency. So they call it the service model banking. We in English is banking as a service. With the banking as a service, traditional banks offer their core banking services to third-party companies like fintech startups or other startups. They offer their core banking services. And in this case, there are two types that I will explain it later in detail. There are two types of the BaaS providers. Some of the BaaS providers, they just lease their core banking platform to their customers. The other ones is they lease it, and also they got a retail customer or the corporate customers. So what is BaaS? Traditional banks and the pure BaaS providers distribute their services through the APIs. So third parties, on the other hand, pay. That's the monetization part, the revenue model part. Third parties pay the traditional banks and the BaaS providers to access their system and the functionality to launch their own financial products and services. So in this case, that I will explain the benefits of it. In this case, the fintech players, fintech startups, they don't, like, for example, a digital bank or challenger bank or a neobank, they want to penetrate in Turkish market. They don't have to get for a digital banking license. They can use license. They can start providing product is really the benefit of the banks. The banks has digital channels. On these digital channels, they can offer products and services from the fintech companies. So this way they can, there are advantages. You know, they don't have to develop their own products and services. They just, through the APIs, they can provide products and services and different things. There is also super apps, super applications regarding this case. We can see in the Far East, we can see in Asia Pacific, there are some examples of the super app. We can relate banking as a platform with the super apps as well. So banking as a platform, banks has branch channels, bank has can offer mobile wallets, and then ticketing system, other services. We call it two different categories of services: financial services that banks usually offer for financial services, and non-financial services, as an example of a non-financial services, like a ticketing system, or you can use different services like utility services, some also company services, like in the different sector, retail sector or telco sector, or different sectors as well. Okay, like banking as a services, as I mentioned before, for banks there are advantages. Like, for example, for banks, increased source of revenue and the cost saving advantages. And also banks also get some data about the customers that are coming to their digital. They are working with the fintech players. So that customer insights also, because the fintech players, the fintech startup, they can send their customer data, customer information, because the banks needs to get a standard agreement with the customer of a fintech, so they can get some increased customer rates, customer data, so they can analyze this data to offer some value-added services for their customer or fintech customers. For fintech players, there is advantages, faster startup launch. This is also important. So they don't, they don't have to, fintech players, they don't have to develop the application. They can develop the application, but they don't have to develop some financial, application or functionalities to offer financial services to their own customers. They can use the banking platform. And also for fintech players, they can get more customers as well. For end user class, end customers, for the consumers, one of the biggest advantages is that they can get access to innovative financial products. They can also have superior customer experience, because banks, they offer the customer experience over their digital channels as limited. Banks have more than 100 products and services, so they are not able to focus on each of the products for the customer experience perspective. But on the other hand, so the end users, consumer end users, customers can get enough customer experience on the bank's digital channels. But with the fintech, using the use of the fintech applications and the services, they can get superior customer experience. Yeah, of course, there's advantages and there's also challenges in this part. For the challenges part, for the banks, banking as a service, traditional banks needs to modernize, needs to upgrade their core banking platform. Some of the banks are the legacy systems, all technologies are being used. So this banking as a service structure, a framework, is not really working well with the old system, old technologies. Another challenge is the changing roles of the players in finance industry. Yes, there is always a question. Fintechs are a threat. Fintechs are opportunity. Yeah, in this case, some banks, for example, one of the CEOs of one of the biggest bank in the US, he said that banks, fintechs are becoming threat for the banks. So we can analyze this information, and we can, as a banks, we can come to the conclusions. And also well-defined API strategy. This is also critical and essential for the banks. They must have a well-defined IP strategy or open banking strategy, and maybe 3 years, 5 years, the banks, their banks, where they reached. This is really important question and critical question to be answered. So as I said it before, top PSA platform providers broken out to 2 different groups. One group is the pure BaaS providers like Solaris, Bankable, Trezor, 11FS, Camry. The other one, these are the pure BaaS providers. They just lease their banking platform, core banking platform, and their revenue model is based on that. The other ones is they also lease their core banking platform, but also they have B2C, business to consumer operations, like Starlink, Fedor, and BBVA. We can give one of the examples. Okay. Yeah, the BaaS, like one of the typical examples, the Goldman Sachs. Goldman Sachs, Apple and the Goldman Sachs, they made an agreement, and Goldman Sachs, through the Goldman Sachs, Apple credit card being offered to the Apple users, customers. So this way, Apple can allow, Apple can offer credit and debit cards to their customers, like as we see in the Apple Card. So they also got an application. Through the use of this application, they can get real-time updates and transactions, other features as well. So Apple Card issue bank, Goldman Sachs. The benefit of the Goldman Sachs through the Apple Card is Goldman Sachs has already given billions of dollars in credit to the iPhone users since Apple Card credit cards was launched. And this is also example of a business as a platform, banking as a platform. In this case, this is, you see it as a whole application. This could be, this is could be one of the bank's, application, mobile banking application. This application not only offer the financial services, but also offer the different services, non-financial services like medical services, retail store, transportation, online shopping, credit, gaming, dining, and P2P mobile money transfer. So these are the some of the non-financial services. We call them, as I said it before, as a super application. It's not only the financial services. People, they don't have to switch to their application. Like, for example, like average users using on their mobile, smartphone, 3 or 4 applications. So, but the bank's aim is this, to have the super app. They don't allow their own customer to switch the applications on their smartphone. So just one single applications, their customer can do all the transaction needed daily life. So as I said, it's like buying a tickets for a bus, various events, charitable contributions, gift certificates, etc. And one of these are like the N26 and the Starlink. These are the we call them a digital bank, a challenger bank. They challenge the traditional banks. So this is also a typical example of it. For example, N26, through this way, they got partnership. They collaborate with other fintech companies, fintech startups, to offer their own services through their digital channels. For example, if you download N26 mobile banking app, you need an insurance, car insurance, or home insurance, whatever the case is, through the Alliance, you can get that insurance. You don't have to go to Alliance, website or online platform to sign up or to purchase that transaction. You can do it on N26 digital channel, the mobile banking. And you need a credit, for example. And N26 has a relationship and an agreement with Ox Money, United Credit. So you can get your credit. For example, you got a saving, and for example, you 100,000 saving, Welsh Parent or Raisin, another name is N26 already made a agreement with that fintech. You can deposit your money, 100,000 euro in the savings account through the N26. These are the like payments: Apple Pay, GPay, Mastercard, Barzal is a local payment solution in Germany. So these are the typical banking as a platform. Starlink, again, has working with, collaborate with Apple Pay, TransferWise, Flux, Moneybags, tail offers, for the rewards and cashbacks. Cross-border payments for Starlink has a relationship, with collaborated with TransferWise. If you are a customer of Starlink Bank, if you want to make a money transfer cross-border, you can use TransferWise services. Okay, I have to really quick. I know that I got 3-4 minutes left. So these are the global regulation frameworks. These are the status of the open banking from the regulation part of it. You see the EU with the PS2. In 2019. So the banks are obliged to, mandatory to offer, develop their APIs. UK also open banking implementation entity 2018. Turkey payments law 2020. So these are the global situation about the open banking development. Yeah, for the value when we talk about this, is a really great chart from Microsoft. The value, we say two different value for the open banking. The business objective, one value is the revenue and the profit growth. The another one is the operational efficiency, like through the cost optimization. So if I had more time, I would talk about it, but I would just say that two different category of the values and the value levers, you can see it over there. And for the open banking business models, we again, this is a great chart from the Microsoft, is that like the compliance with the regulation. That's the first part. The banks, financial institutions, they comply with the PS2 requirements, or they provide basic open APIs with the compliance. For monetized asset, we call it monetization. In the monetization, bank invests in a more advanced API platform. So they create business model to monetize raw data in the banking services. And the third one is to add new services. The banks, they extend their API strategy to monetize the insight and the new financial services. They become account information service provider or payment initiation service provider. And value-added ecosystem, also they got ecosystem banks for the financial institutions. They have the ecosystem between bank, merchants, and the consumers by the open APIs. So they offer new services for financial and the non-financial. So open finance, as Mr. Sinan Kadıoğlu explained it, I'm not gonna spend much time on it, 1 minute. Open finance is the next step in the open banking journey. Yeah, first of all, it introduced with the UK Financial Conduct Authority, FCA, for the development of open finance. Open finance would open a wider range of financial products and the services to the transformative impact of the third-party data share. So the basic goals of the open finance is to gain access to the wider range of financial products and services, to have greater control of their data, and also to engage with the finances and empower the better financial decisions for the consumers. So again, the end goal is improve for the customers, for the consumers, improve the financial health, driven by the market innovation and competition. Mr. Sinan Kadıoğlu already explained it. I'm not gonna go in that. Yes, the Kuwait Türk approach, what we do in Kuwait Türk Participation Bank, what we do is that we got a structure, we got a framework of fintech digital, fintech onboarding. We have some steps over here, like for example, when we have the fintechs, we do pre-assess those fintechs. We also take those fintechs products and services with them, introduce with our business units, depending on the need or the request. So also we have lastly evaluation committees. They make the last decision. Then afterwards we started projects to cooperate with the fintechs. This is Kuwait Türk's fintech integration process. Yeah, of course we have an incubation center we call Lonca. We have also venture capital investment funds as well. So we have as a Kuwait Türk API portal, and we offer more than 75 APIs. We saw in 2-3 years we collaborated with 20 plus fintechs. We do also we are a member, membership. We sign up for different databases. We do those fintech scouting, and as I said, we have incubation acceleration center. And InnoPay, we work with InnoPay, but actually InnoPay requested information about Kuwait Türk's onboarding approach, and we share some information with InnoPay, and they prepare a report, comparison metrics named Open Banking Monitor. This open banking platforms, 300 banks from 58 different countries. They evaluate the open API portals, open banking maturity for different banks, 300 banks in 60 different criteria. And the Kuwait Turk API market platform in 2019 and 2020, they shown among the best API market platforms in the category, named Masters in Openness. After the evaluation, you see the Kuwait Turk over here. It's a May 2020, and we are in with the other banks as the Masters in Openness, that shows that vision and the projects and the, there are a lot of management committee and the dedication to improve open banking API portal of Kuwait Turk. That's all. Yeah, it's 11:30.
Thank you very much, Mr. Selim Taştan, for your this very important presentation, and especially thank you very much for your punctuality.
You're welcome.
We got very valuable information from your presentation. Especially, I got that the banks are in the middle of in the middle of junction, and I believe that the banks on one side, the fintechs, and the other side, and in the middle of that way, open banking system and the new financial system, new fintechs and the new startups will divert or will direct the system of the banking, I think.
Yeah, absolutely.
Yeah, thank you very much, Mr. Selim Taştan. Now we will continue our webinar with another important practitioner, Mr. Kemal Fayza. Mr. Kemal Fayza, before his presentation, I would like to shortly introduce himself for you. Mr. Kemal Fayza is Investment Relations Director, Reinvest Ventures. It is right, Mr. Kemal? Yeah, your unmute position, Mr. Kemal.
Yes, yes.
Thank you very much. Reinvest Venture, is it right?
Yes.
I'm not wrong. Okay. Mr. Kemal Fayza is a digital leader in the fintech space, focusing on digital product development, open banking, neo banking, crowdfunding, and is working for Reinvest Ventures as investment relations director to grow the company's VC fund and angel investor network. Thank you, Mr. Kemal Fayza, for your contribution this webinar, and the ground is yours, please.
Thank you very much. I'm just sharing my presentation. First of all, thank you very much for this opportunity and to talk about such an important topic. Today I will present in a different perspective. So the name of my presentation is the new language of fintech world, the APIs, because it's the beginning of the story to launching, each bank launching their APIs will make easy to connection between different parties, especially banks to banks and fintechs to banks and fintechs to fintech. So it will create an ecosystem, will work together. Let me go to the next slide. So the world is changing, so the financial world. This change affects the banks, fintech startups, and other financial institutions. We need more collaboration, more integration. So according to the connectivity benchmark report, an average organization uses more than 800 unique applications, but only 29% of these applications speak with each other. So even in-house, we are struggling to connect our applications. So it will be harder to connect with other parties. Let's take a look at it for banks. So integration is time for banks. Integration is a huge cost for banks and also for especially IT teams in terms of time and cost. again, from the report of Connectivity Benchmark report. So APIs are must for banks. So in the, like all we know, there's a quote of Bill Gates, so banking is necessary, but banks are not. So the banks, as Mr. Selim mentioned, just transforming themselves to platforms. So the APIs will be the key to become platform. So a standardization APIs will be must for banks, and it will be scaling opportunity for fintechs. So banks were closed systems, new regulations and new needs of customers transformed them and encouraged them to build their APIs. The journey going to open economy has started. Banks, fintechs should take their position on this journey. So let's look at the companies who are using APIs. In this connected world, we can assume most companies need APIs to build integrations. So new collaborations and new revenues, not only for revenue, but also for sustainability. So the number of the companies using API increases. So we can see a dramatic increase in just 1 year. 20% of the companies generate revenue from APIs. So it's a really, really important part of their revenue. So we can call it non-brand production. So we will offering our capability via APIs to third-party companies, and they can create a better user experience with our technical capability. This is also another part of the banking. So when let's take a look at this graph. Financial service industry, I think, had already understood the future and took action. Year by year, the number of companies building their APIs are increasing. So you can see that starting from 2008, the number of the companies launching their APIs increasing. So especially in the last 3 years, 4 years, it's growing exponentially. So we can say it's growing exponentially. When we compare the APIs in different categories, the data and financial APIs are the most common APIs. The companies are just launching, especially in the financial and data APIs of them. So this is also another important indicator that's showing the fintech and finance sector interest on the open banking opportunities. So, well, what do the companies on this trend? Not only the banks, but the top tech companies, the internet companies. So what are they doing? The Google is offering instant buy and wallet objects APIs. iZettle users can accept payments via mobile tablets and the web with iZettle. MasterCard just offering so many APIs. So for e-commerce, for money transfer, so for card transactions. So PayPal is just adaptive payments API by PayPal. Enable merchants and developers to select the payment scenario is the most suitable for their company. Square Connect API allow merchants and third-party developers create apps and tools. It's really interesting. Apple Pay, we already know. The Plate it's the most interesting one. So banks, fintechs launching their APIs to integrate with new parties and to create new business models. But Plate is just built on the open banking system, the open data ecosystem. So it's just gathering the APIs of different companies. And again, we can think it's just API marketplace. So it's a really important point. So it's very trend in these days. an API for developers and merchants to build apps and accept Bitcoin payments. So this is also another important indicator. So let's look at the Fintech API strategies. So let's assume that we are fintech. So I will commit to the other one. But if you build the technology and the product, it's costly, it takes a long time, fewer products, and hard to scale. Instead, if you focus on the APIs, to deepening in core product and technology, to increasing the scope and functionality of the APIs, and you will use the advantage of the agility, then you will let startups develop products with your API. So as a result, there will be more products with same API, better customer experience, scaling fast, and diversified revenue. So let's assume a fintech. It could be any other fintech startup offering payment acceptance for businesses. So a fintech startup will have to deal with license, regulation, POS terminals, card readers, mobile app, web app, user experience support. So many things in just one company. But if we transform this company, this fintech, to API first company, just offering APIs and letting startups to build products over its APIs. So it will mean new markets, new customers, new revenue streams, better customer experience, and scaling fast. So let's look at the advantages of open banking. So it will provide cost effectiveness. So in a less time, it will mean more integration, and it will mean more revenue. So better experience, as I mentioned before, with the same API, maybe 5 different fintech startup can build different products, so different flows, different user experience. So it will also very beneficial for customers. As we discussed, more products, the more services within the context, within the same API system. The openness, it will also encouraging to startups or banks, because when you open your API or open your data, of course, with the system, with the process, it will help you to, how can I say, to integrate with the reputed partners. So openness will help you to in reputation and also integration. So the APIs and open banking allows to new players to the market. Not the new players mean they are a bank, but they don't open branches, they don't hire sales and marketing professionals, but they're just building the core banking system and transforming them to the system with APIs, and call for companies to build their own banking services. So it's really a new model and very trend at these days. So digital revenue, the share of the digital revenue will increase in the total revenue of the company. New ventures with white label business models, like in the banking as a service model, but not only for banks, but for also fintechs. The new companies, new players will enter the market with using the same services with effective model, with an effective marketing. So better payments. So there's a transformation, you know, from cash to card, from card to NFC payment. So these services make easy the customer's life, so we don't have to take our credit card with us. So everything is just on an online system, and we can interact with the all stakeholder players with the system. And the increase in peer-to-peer models like the money transfer, peer-to-peer lending. So it's also helping to, how can I say, building new models, especially in this area. So as a result, it's my definition, transforming our capabilities, our technology, our assets into open APIs. So it means to a common language, means sharing the innovation load with other initiatives. So the opening or building our APIs will help us to transfer the innovation load, innovation responsibility with other partners in the market. APIs are feature, and we will, how can I say, we will talk about APIs in the near future, more than that. Thank you.
Thank you, Mr. Kemal Paiza. It was very important, very interesting presentation, and also it was a very important, interesting for the banking practitioner in this area. And there's a question. If you have any more time, there's a question for the open banking, and as you know that the banks are. Mr. Brigade said that in the near future we don't need we need banking system, but we don't need any more banking brands. So it means that it is also absolutely related with this open banking system, and the fintechs are growing very highly in the market, and the banks are using this fintech company in their activities, and especially for the cost efficiency and cost saving system. But in the near future, lots of fintech companies will take the role of banking, and related to this question, the fintechs companies are threat for the banks or not? What do you think? Yes, we can start with Mr. Kemal. Yes.
Okay. I don't think it's a threat. So of course, if banks are late for innovation or for collaboration, of course it will be a threat. So the fintech startups is just already, we can define them as, how can I say, that there was a research that shows a bank is just doing account depositing, credit, money transfer. So if I'm not wrong, maybe 15 or 16 different fintech startups can do vertically a bank's products to offering to the customers. So I don't think it's directly a threat. So the banks, the open banking is already with the PSD2 is just to, how can I say, as I mentioned before, is helping also to banks to reach more customers. So the banks are using maybe digital marketing and brands, sales and marketing professionals, and these are very costly elements for banks. However, with opening your data with the consent of the customer will mean you will reach to more customers with more products, and it will it can mean more revenue. So it changes whether the bank's perspective the fintechs is a threat or is an opportunity, but I think it's a really good opportunity. Now we can see in Turkish market and also in European market, especially there is so many partnership banks and fintechs, and just the both growing. So it's just my thinking.
Thank you, Mr. Kemal Faiza, for your very good answering. Yeah, Mr. Dr. Selim Taştan.
Okay. Well, actually, yeah, I agree with Kemal. Yeah, well, when fintech, yeah, always a question. This question has always been asked. Fintechs are opportunity or a threat? Opportunity or a threat? Yeah, the opportunity part, yes, the banks are showing a reaction to fintechs. How they gonna, how do they show the reaction? They they open up their incubation center. They open up the acceleration center. They got the API portals. They develop the APIs, as Kemal said it. These are the things that banks showing signs that, okay, yeah, we are ready to collaborate with. But I'm gonna talk about also different perspective in this case, with starting with the JP Morgan Chase CEO Jamie Dimon. They said this year in April, he said that fintech is in an enormous competitive threat to banks. I think that is really a strong statement from JP Morgan Chase. Who is JP Morgan? JP Morgan Chase is the largest bank in the United States. Yeah. And the JP Morgan Chase is the largest bank as of July 2021 by the market capitalization $453 billion US. So the CEO, Jamie Dimon, has been a CEO for like 10, 15 years, 20 years in JP Morgan. So he says threat. Okay, the banks need to think about it, some of the banks, we see it in the global and the Turkey, that they don't have some, work, or they don't start their own project to create API portal. They don't have like fintech onboarding framework, and they just, they don't want to hear about the developments of the fintech ecosystem. Yeah, the Turkish fintech ecosystem is not strong, is not mature enough compared to the Europe, compared to the US or China and other countries, but it's going to become a mature. In January 2022, something is going to change. Digital banking licenses, service model banking. So think about it. So yes, it's opportunity, but the threat, I think, is, I agree with the Jamie Dimon, enormous competitive threats to banks. And also one thing that I can add it is the big tech, big technology players. We call it FAMGA, Facebook, Apple, Microsoft, Google, Amazon. These have a lot of traffic on their environment, on their platforms. They got apps, they got millions of customers. So think about it. If they decided, they don't do it. They do it through the collaboration partnership with the traditional banks like JP Morgan and other banks, Standard & Chartered. If they decide that we're gonna start offering financial services to our customer, if they make that decision, what is going to be the change in the financial services sector? Think of it's Core Bank. It's a bank based on South Korea. They started out a Kakao Talk, like 85% of South Koreans, they using that like a WhatsApp similar application. One time they decided that let's go and let's start giving the financial services to our customers of a Kakao Talk application. So now in 4 years, 5 years, they got over 10 million customers in South Korea. That is pretty strong, development. Yeah. So you know, we need to think about it. The threat part, yes, opportunity, of course. Yes.
Yeah, a summary. We will follow. We will continue to follow the new developments on the fintechs and the banking system and in the financial sectors. And we came to the end of our webinar. And thank you very much for our participants, especially for our presenter, Mr. Dr. Selim Taştan, Mr. Kemal Fayza, Mr. Sinan Kadıoğlu. And thank you very much. It was very important webinar for us and for the participants, all participants, I believe that, and also hope to see you for the next webinar in the next future. Again, thank you very much for your participation, for your contribution to this webinar. Thank you. See you. Goodbye. Take
You're
care of
welcome.
yourself.
Bye.
Thank you very much. Thank you. Bye-bye.
Bye.